Hi there, my name is Dylan, and I made this short video to help people understand the importance of having life insurance and to simplify it a bit. There's only a couple of slides here, so I promise to make this very brief yet beneficial for you. And just a real quick background on myself. My name is Dylan. I've been a licensed life insurance professional for over 15 years now, and I've also worked and been licensed in both the mortgage and the debt and credit industries. So, with this combined work experience, I've been able to help thousands of people to improve their financial position. And I believe that all financial success is dependent upon starting by having the right life insurance strategy in place. And since I'm an independent agent, I'm actually able to work with all the top companies, making sure that you get the right kind of plan for you. So, who needs life insurance, anyways, and why? Well, this is easy. I always say that if you're alive and will eventually pass away, then you need life insurance. Basically, every single person living needs to have some form of coverage in place. Even a lot of business owners will carry extra policies on key employees of their business just to help counter any type of financial loss that might take place in the event of their passing. Now, there's a lot of reasons why to have life insurance. Some of the most common reasons are to help with any financial expenses, such as funeral and burial costs, paying off any debts like mortgages, cars, credit cards, medical bills, or replacing the loss of income for your family, both now and in the future. Some people want to fund family businesses or investments or even pay for college, sometimes giving money over to charity. So everybody has their own reasons, but you do not want to be the person who didn't have enough coverage and then end up leaving a financial burden behind on somebody else. And at the same time, you don't want to be the person responsible for any financial burdens if, in fact, you lost, say, a spouse or family member or key employee. So, most upper class people use life insurance as a way to also accumulate and transfer wealth to their beneficiaries because there's some really great tax advantages and cash accumulation benefits that can be utilized throughout your life by using life insurance as well. But we could talk more about that later. So basically, to break it down, there are two main types of life insurance. There is term, and then there's permanent policies. So term policies are they're designed to provide coverage for a specific amount of time, like 10, 15, 20, or 30 years. And these term policies are great because you're able to get a much higher amount of coverage for a lower premium amount. And the idea behind having term insurance is that you create an instant estate to leave to your beneficiaries in a real simple manner. You can also add what's called a return of premium rider. And what that means is at the end of the term, say you had a 20-year term policy, and let's say you're still alive, which is fantastic. Well, the good thing is you'd actually get back every dime that you'd paid into the policy. So this creates a great win-win scenario for you and your family. It's almost like having free coverage because you pay it throughout the term. If you pass, then there's the death benefit, but if you don't, then you get all your money back, which is obviously a good thing. So there's also what's called rapid issue policies, and what that means is that you can have coverage started within days without having to do any kind of medical exams or anything like that. So term insurance is the most common type of life insurance, as I'm sure you can see why. Now, the permanent policies are a bit different, and there's also several kinds of permanent policies, but the most common are whole life and then universal life policies. And these types accumulate a cash value similar to a savings account that you're actually able to access throughout your life. And the premium amounts on these types of policies are a bit higher, but you're able to maintain coverage throughout your entire life. Plus, it acts as a supplemental retirement account. So, a lot of financially savvy people load money into index universal life policies, for example, because they're able to get good returns on their money with no downside risk of the market. And that enables them to create long term wealth without the potential of losing money. So, index ULs are a great avenue if you're wanting to put away money on a regular basis for the long term. Now, determining the right amount of coverage can be quite tricky, actually, and anybody you talk to will have a different idea on what they feel is the appropriate amount. And it's really hard to put a value on somebody's life, but there are several economic costs that will affect a survivor. So some agents actually use a standardized rule of thumb like 10 times earnings plus debt balances, but I believe it should be evaluated quite a bit closer. Some things you probably want to consider are, what are the estimated funeral and burial costs going to be? What are the expected lost earnings of the individual? And you can look at that throughout a lifetime. Are there any mortgage debts, auto loans, or other debts that need to be paid back? Do you want to leave money for a family business or for investments or to help give the kids and grandkids a good head start? What about leaving money or a donation to your favorite charities or schools? So there's a lot of things to consider. And another thing a lot of people don't think about is the time for emotional recovery. And what I mean is, I know that if I lost a loved one, like a spouse or child or parent or anybody close to me, I wouldn't want to go right back to work right away. I would probably want to take, the next 6 months to 12 months off from work just to recover, emotionally from the loss. And by having the money to be able to do that would be extremely comforting for anybody. So the bottom line, though, is the emotional hardship of losing a loved one is absolutely unavoidable, but we can definitely take care of the financial aspect by making sure that we have a strong plan in place. And that's why I say leave a legacy, not a burden. So, what's next? Well, a lot of people may be overwhelmed at the process or don't want to think about it or deal with it. It's real simple to put it on the back burner. And this is a lot easier than you think. And the main thing is get something started and in place right away. Don't get in the trap of, well, I got to think about it, because this is one of those things you do not want to put off. I mean, we've all seen those families having to put together fundraisers and car washes to help pay for the costs of losing a loved one. Not to mention, every single day we're getting older, and that means our risks go up. And with the risk going up, that also means that the costs are going up every day that we delay. So best thing to do is get the process started right away. The first thing you want to do is just give me a call, and we can determine the right type of policy. We can figure out the right dollar amount and figure out exactly what the premium amounts are going to be. You can reach me directly. Give me a call at 661 636 6446, or shoot me an email. There it is. It is Dylan at dylanconnor.com. And if there's any way I can help, please allow me to do so. This is exactly what I'm here for. And I look forward to hearing from you soon.